Welcome to the weekly swing low. It's September 1st, 2025. So we have a new monthly candle starting. We're also going to close out the Q4 monthly candle. We're also starting what is usually September is usually a bearish month for the S&P 500 and the broader market in general. So you can see this is last September, or that's September 2023, red. September 2024 was actually green. But notice we traded below the closing price of August. So we did have a drawdown at some point that September. And you just keep going back the years. This is September 2021, also red. September 2020, obviously I was coming out of the COVID low. September 2019 was also so. And I think seasonality is a terrible timing tool. You want to use price action, but keep in mind we have rallied for 20 weeks, right? Like look at this weekly chart, and so we are going to get a weekly cycle top at some point. Also notice we have been this light colored line is a 10 period moving average. So this is a 10-week moving average. Look how elevated we are above it. We talked about that last week. So this is your S&P. Last week, the range was a high of $649.48 and a low of $641.57. And ultimately, we have the Fed meeting coming up in a couple weeks. My guess is that becomes our top, but it's possible we get a top before that. Maybe we bottom coming into that week. Unclear, but very likely we get a pullback in September. Again, because we rallied for 20 weeks, and that is generally, like you can see, this rally lasted 17 weeks. This one was a very short cycle, to be fair, but that lasted 13 weeks. This one lasted 22 weeks, right? This one lasted 19. So we can certainly get a few more weeks of upside, but like you would think that within the next couple of weeks we're gonna get a top, and so just we want to keep that in mind as you're sizing trades. And if you look at the daily cycle, we Friday was actually day 19. Also important, we closed as a swing high. So I'll move this line to be super clear. So we made a new all-time high on the SPY on Thursday, August 28th. That was at $649.48. That's the weekly range we talked about. Notice where we closed Friday. We closed below the low of that candle. So that is technically a swing high. We can see looking at the futures, because that traded today, since futures generally trade when there's a US holiday, we can see the daily candle didn't really do much. Just kind of stayed inside the range. So we didn't get anything decisive today. And so we're gonna have to see, is this swing low gonna hold? Or swing high, excuse me, is this bearish swing high gonna hold, or is it just a little consolidation before a final push? I'm leaning towards the latter, that we're gonna get more of a push into the FOMC meeting that's coming up in a couple weeks. In terms of your levels, let's go back to SPY. So very clear levels here. As I said, we have a swing high. Where does the swing high active? So the swing high is active below $645.34. So super, super clear. If we can break above that level, right? So something like this, that's an actionable trade, right? Like that is an actionable trade. Because if we can do that, you expect we get some kind of follow through on something like that, right? And then we're off to make another new all-time high above this high here. Again, I don't know that we get a lot more upside given where we are in the weekly cycle and the daily cycle. 1918, it's totally possible that this is going to become our daily cycle high, because an 18-day rally is already pretty long. Now, to be fair, this last cycle was super long at 46-day rally. The one before that was a 29-day rally. So we certainly get rallies that last 20, 25 days, even longer than that. And so there's no reason we have to top here, but it tells you at 18 days we're not early, right? Like at this point we're at the tail end. And what I suspect is going to happen is people are going to find an opportunity to take profits in September, right? Like there's going to be some kind of catalyst, and people will say, oh, you know what, I'm going to take some money off the table. And then we'll start the daily cycle decline, which will also start the weekly cycle decline. That's my expectation. But look at this long-term chart. Look at this beautiful wick. We've been talking about this for months now. This wick was a sign that there was a major bottom in place. And look at the follow-through we've had. This was a higher high. 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 All the more reason why we would expect some kind of pause Like, look at this bottom. Look at this little candle. Higher high, higher high, higher high. More like, actually, what is that? 5 months of higher highs, and then we get a pullback, which is a little reset, and then we continue higher. This is what I'm expecting for September. Something like this to continue to move up. So I expect it to be a buying opportunity. That's SPY. Let's go through the rest of the tickers, and we'll go through them relatively quickly. Before we actually jump to that, let's just jump down to Bitcoin, because the other tickers are doing the same sort of pattern. For Bitcoin, it's very clear we're in weekly cycle decline now. So we made a new all-time high through about the week of August 11th. We closed below the low of that candle. So again, just very objective. It's a swing high. By closing below 116,859, that was a swing high. We're now quite a ways below that, like at least, what is that? Like at least 8%. And so, again, similar to what we talked about on the daily, you want to see something like that. I don't think we're going to get it all in one candle. We could, given the way this thing reacts. But this is the kind of thing I'm expecting once this is over. And to think about the count, this was a top on week 18, and we're currently on week 21. So no reason why we couldn't get a bottom soon. And maybe the bottom comes with the FOMC meeting. That's the thing that's a little interesting here, that Bitcoin is in weekly cycle decline, but S&P SPY is not yet, which means when SPY does go into weekly cycle decline, it will probably pull Bitcoin down even more, which will stretch out this weekly cycle decline and create a better sort of rubber band bounce back effect, is my expectation. So that's that. So a very clear level on the swing low on the weekly. What about daily? So for the daily, that swing high is the same level, more or less. It's actually a little bit higher. So you can see the swing high on the daily came from this bearish outside candle, makes a higher high, new all-time high, and then makes a lower low. And then you get a little consolidation a few days later, and then a dump, another lower high, dump, another lower high. And so right now, this is probably setting up for another lower high. Again, this is your daily chart. On this daily candle right now on Labor Day, we have a bit of a doji setting up. So a low of 107,250 and a high of 109,907. So very clear levels there. You need a break above that high, like right there. We're also below the 10-day moving average. So all of this is setting up some really nice, like we're going to see a very clear sign of a bottom when it comes. The key is to not try to predict it. And so it's very possible that when we get our daily cycle low here, it will also be a weekly cycle low. So that's Bitcoin. What about ETH, which has been outperforming Bitcoin, which in terms of crypto is what I would be over-indexing on. That's what I am over-indexing on. It wasn't clear that ETH was in weekly cycle decline yet, and it still hasn't actually printed the swing high yet. So the all-time high for ETH came the week of August 18th, so a week after Bitcoin topped out, and the low of that candle is 4,062. So we have a little bit of downside to go even before we confirm the swing high on the weekly chart. So something like that, right? And so that tells you want to be cautious here. If you're not in, just wait, be patient. There's no reason to jump in here. Right now, we just have an inside weekly candle. The low from last week was 4,257. So that becomes a bit of a line in the sand. You fall below that, then we're probably going to make this lower low here. And we've probably started the weekly cycle decline the same way Bitcoin did. And similar thing on the daily. So for the daily, right now, we would need a close above 4,400, 4,490 to give ourselves a daily swing low. We're also trading below the 10-day moving average, just like Bitcoin. So very simple here. You got to be patient. What about the ratio of ETH to Bitcoin? That is also in a little bit of a downtrend on the daily chart, but on the weekly chart, yeah, same kind of picture. So the ratio looks very similar to the absolute chart of Bitcoin, of ETH and Bitcoin. All right, so that's the crypto complex. Let's go back to the other tickers, like the other broader market. So QQQ. So QQQ notably did not make a new all-time high on Thursday the way SPY did. Instead, it made a lower high. I'll zoom in here. So that's important. We talked about how the ratio of QQQ to SPY was starting to break down. These are all signs that the rally is getting long in the tooth. And so if you look at this daily chart, this was your last all-time high back on August 13th. S&P went up and made a new all-time high. This didn't even come close. So that's really important to note. This closes a swing high by closing below $572.46. So that also makes things very clear. If we can break above that level, that would make this here a little swing low, and also a higher low compared to this low and a higher low compared to this low. Not great that we almost took out this whole rally. Like, let's see. This is a rally of 31 points, and we have declined by how much? Let's see. $24. So well over 50% of the rally has been retraced, which is not great to see, but it's absolutely survivable. So across above 575 would do it, right? Above this candle, it's marking a little low right now. So 575 becomes your line in the sand. And as I said, the ratio of QQQ to SPY, look at that weekly chart. It's topped out, right? Like it closed as a swing high last week, and now we're threatening to make an even bigger swing high and make new weekly lower lows. And so as we talk about the rally for the broader market getting long in the tooth, this has already started to roll over, and that tells you the direction the broader market is probably going very soon. What about DIA? So DIA is starting to outperform. It has been outperforming SPY, as we talked about. Another sign that we're late stages, because this tends to outperform when the market is not rallying. So for DIA, we have a little bit of a doji candle for Friday. The range is a high of $456.84, and the low is $454.28. Very simple. Have to clear that range, stay above that low, get above that high. And it's the same picture though on the weekly chart. Week 20 still levitating above the 10-week moving average, although it did touch it the last 3 weeks, unlike SPY. But not much. This thing is probably going to drop into weekly cycle decline just like SPY, because it's also rallied for 20 weeks. Same kind of thing. What about IWM? So this was a little bit of a catch-up trade. This still hasn't made a new all-time high. We're getting super close, which is part of the reason why I think this thing probably makes a new all-time high before the FOMC meeting, like going into it. We did have we did close as a swing high on Friday, though, daily swing high, excuse me. That's by closing below $235.35. But we only closed like 15 cents below that. So that becomes your line in the sand. Can we break above $235.35? If we can, it's game on. If we break below $234.37, that creates another lower low on the daily chart and a sign that we are starting the daily cycle decline and probably the weekly cycle decline. What about SMH? A very similar picture to QQQ. Did not make a new all-time high on Thursday the way SPY did. Instead, formed a lower high and a swing high by closing below $295.98. So basically $296. That becomes your line in the sand to the upside. The weekly candle is looking really ugly, a red shooter. These are, again, September is bearish. Watch out below. What about Dixie? So Dixie is so again, this traded today. So this is your Monday candle. This is your weekly chart, but this is your Monday price action that's represented on the weekly. And you can see we've just been kind of consolidating here, but these massive upper wicks on the weekly chart. It's week 19. We are holding above this little swing low from week 11, but I think we're going to break it is my guess. This little shelf here exists basically below $97.44, 97 spot 44, call it. And if you look at the daily chart, we are, my read on this, right? So we have that. We appear to be in a daily cycle that topped out on day 6. So that's the catch, right? So it's day 27. That we are declining in the daily cycle and we'll probably get a bounce soon, right? And so This cycle topped out really early, so we've been declining for a while, but it's really just been mostly consolidation. But again, there's that shelf that we looked at on the weekly chart. So I looking at the monthly, this looks like it's in longer term cycle decline. And that's consistent with the idea that the Fed is going to start cutting rates. The dollar tends to weaken in those scenarios. And so all that points to this going lower and creating more fuel for something like a gold, for precious metals, et cetera, to complete the 8-year cycle rally. All right, let's move to the US 10-year. So weekly cycle, it's week 21 after a top on week 7. So we're still declining. It's a left translated weekly cycle. So that means we are going to get a bounce at some point. My hunch though is that, again, thinking about how the Fed is going to start cutting rates, is that this thing starts to drift lower. If we look at the monthly chart, you can see we had this furious rally coming off the COVID lows. You did have this fierce pullback for 4 or 5 months, right? And then, right, like within the bigger rally. But look at what's happened basically since the middle of 2023. So the last 2 years, essentially, we've just been going sideways, right? And so there's a world where this thing explodes to the upside, right? I suspect it's the opposite though, right? And I mean, it doesn't have to be an explosion. We could just drift lower, but I think this eventually breaks down, right? At the very least, revisits this like 3.25 level. I don't know that we go all the way back here below like 1%. And so in reality, when you look at this chart on the long term, this will probably just look like massive consolidation, right? Like just it's really just kind of going sideways as opposed to it just kind of dropping down. We'll see what happens in real time, of course, but that's my expectation. U.S. oil. So oil may have made a little swing, may have made a little weekly cycle low. So that was week 19, and by trading above 63.93, we do have a weekly swing low in place, and we're trying to get some follow through today. We traded today again. Most of these things like commodities do trade during U.S. holidays, and so staying above that 63.93 level is all that really matters at this point for U.S. oil, WTI crude. What about TLT, which is going to be correlated with the 10-year Treasury? So it looks very similar in that way. So this one topped out on week 11 so far. So that makes this week 14. I think this will end up going higher because as the Fed cuts, rates should go lower, which makes the price for this go higher. We just have to close out this long-term cycle. And if we look at a monthly, wow, like this all looks like massive consolidation after this big leg down. And we know after consolidation, we get a trend leg. And so I think we might end up seeing a trend leg, right? Something like this, right? I'm not saying we go all the way back to the all-time high because that would be right, like that sub 1% kind of thing. You know, those days may be over. But I think we at least see some mean reversion back up here, like the 120, like 120, 110 in that sort of neighborhood. So that's TLT. All right, we'll close out with precious metals, and then we'll do some other commodities as well. So gold looks like it may have just woken up. This is another one that traded today because of the U.S. holiday. So I took a position in this on Friday. And if we talked about how this has just been, we'll look at the weekly chart. This has just been consolidation, which is not a bad thing, right? Like it's working off this gigantic gain, right? Especially for something like gold. So it topped out here. It sort of bottomed here. And then we've just gone sideways since. How many weeks has that been? So it's week 16 now. Now, here's the thing. This tends to do this. Like it takes it goes on these kind of weird cycles. And so it's entirely possible that like this is not your cycle low and it's actually something like this, some kind of like stealthy cycle so we can keep moving. So I wouldn't pay too much attention to that. The bigger thing I would focus on is the fact that I'll zoom out here, the monthly chart. We are in the latter stages of the 8-year cycle rally, right? The last one rallied for 56 months. This is what the latter stages look like for that one. The one before that was actually kind of short. It rallied for 35 months. That was a bearish one because it was left translated. This other one rallied for 103 months. This other one was actually also 35, also 34. All that to say, in a bearish cycle, a bearish 8-year cycle, we tend to top out around the month 35. We are not in a bearish cycle, or at least there's no indication that this is bearish. And so this is actually month 36. And I suspect we're going to get a rally at least into the end of the year, right? Maybe not to month 56, but we're not topping here. And if you look at this, you have this big monthly candle and then 4 months of consolidation. And we just started this new month in September. I think this is our breakout month, right? Like this is where we do something like this, right? The catch is GDX and silver are not, they're not, like things aren't moving in lockstep in terms of cycles, which is why, again, you really focus on price action. To that point, looking at this daily chart, this is your last significant swing low. So we are just counting today. This is day 8 of this new rally. And so this thing could have legs, right? We could rally easily for another couple of weeks before a significant pullback, which is why I'm taking my shot. Certainly with the broader market, if we get a broader market pullback in September, that will probably drag us down. But you could take a shot here. And if we look at, and I would say the low for today was 3,437. So that could be a bit of a mile marker for you. What about silver? So silver traded today as well, and it's looking, nice and perky. Look at that. So, and we just closed, which is why this now says Tuesday, because it's going to look like, but you can see we are day 22. If you use the same count as gold, this is your last significant swing low, so we're swinging here. As I said, let's look at the monthly chart. This is a little bit of a different picture. We have a significant swing low here as opposed to gold, which has been kind of like consolidating. And we're now in week 21. So that gives me a little bit of caution, right? Like we are literally 21 weeks into this, the rally off of this low here. That said, that's what stops are for, right? And so if you look at silver, the close we had today was a low of 39.55. I would wait for some kind of pullback, and you want to long the recapture of some kind of swing high. But this is waking up. And as I've said in the previous updates, we haven't been this the silver prices haven't been this high in like over a decade. That is significant. We are well above this cluster of resistance that we had a hard time breaking out of. And we're now heading back towards, are we there? I think we're basically there. You had this pocket of resistance here, right? Like, so we've cleared this. So we're now kind of like, we're a stone's throw away from that run to 50. And then the real question becomes, what does price discovery look like, right? Like, what does this thing look like? How much higher can it trade above 50? I do suspect we get a bigger top on this, just like we get a bigger top on gold when we get an 8-year cycle high. So we probably have to the end of the year for this to rally, is my guess. In GDX, similar thing. Also important to note, we are at all-time highs for GDX. Like that was your old all-time high back in 2011, September 2011. We are now above that. I would expect that price retraces and like retouches that. So that's probably going to be a chance for you to reload here. So $58.93. Again, broader market probably is pulling back as well. So you're going to get a chance. I don't think you need to chase this here. If we look at the daily chart, again, similar to gold, last significant swing low was here. That was August 19th. We've now had a nice clean rally since. The low for Friday, or for Friday, because this isn't trade today. The low for Friday was $61.21. Or excuse me, no, the low was, that's right. It was $61.21. Keep in mind, we did trade today, gold did. So I expect that this is going to open higher tomorrow, maybe even like a gap up. And so I think that actually might give you a nice little tactical entry if we get some back and fill of that gap. All right, let's move on to platinum. So platinum is forming a swing low on the daily. That is very timely. So this low is August 27th. The high for that candle is $1,103. So call it $1,104. We've now closed above that as of today. So you can play this. PPLT is this ticker that you would use. And the important thing here is that this is your weekly candle, or excuse me, your weekly chart. And you can see we're just coming off of a significant downdraft. So we rallied for 14 weeks, and then we may have just made a low on week 9. Oh, wait, is that week 20? Yeah, that's interesting. So we probably have a low here on week 20. So we are getting a swing low as of today, because again, commodities traded today by closing above 1140. So it's got to stay above 1140. That makes this whole thing, well, technically it's got to get up, we've got to get above this high. So that's 1151, call it. But we look like we're well on our way. So you could take a trade here. And remember, this thing was just kind of relentless to the upside, and then we had this violent pullback. So another example where you don't have to chase things. And I apologize. This is actually palladium, so XPD USD. I think we also have a swing low on platinum. Yep, same thing, different levels. So for platinum, the swing low, the daily swing low is active above a 1339, call it, right? That's the daily swing low. We're also getting one on the weekly chart too. So for the weekly, platinum rallied for 15 weeks, and then it looks like it might have just made a bottom. So see, now that's tricky, right? So that, like, it's possible that this is your weekly cycle low. It would be a very stealthy one and one that happened really quickly. By breaking out above this cluster of lows here, or highs really, that's above 1377. So as long as we can stay above 1377, you can see this line here. That is a weekly swing. And again, that the numbers I was quoting before that was palladium. PPLT is what you can use to play this. It did not trade today. But for PPLT, you want to see a move above $126.30. So to be clear, you want to see this weekly candle do something like that, right? And that, right, like to close above this candle here. And to be fair, we actually have to close above the high of this candle because that's what's really marking the low. But this would be your first kind of sign that we're making higher highs. So that is very positive. So it looks like the precious metals in general, gold, platinum, look to be buys for now. I would be cautious again with the broader market potentially topping here in September. So natural gas had a nice a nice bullish outside candle on the weekly chart, and now we're just consolidating to open the week because it did trade today. We had a doji candle today on the daily, high of 2.99, low of 2.86. So you watch those levels, see which side of the range we're gonna break. And then finally, let's look at some uranium names. So CCJ, I've been talking about this, how the weekly chart, this thing tends to rally for like 11 to 12 weeks. This looks like this may have been your weekly cycle high and this may have been your weekly cycle low. We've got to stay above $76.95, call it $77. Pretty violent pullback on this weekly chart from last week. Let's look at what the daily looks like. Yeah, right. So the Friday candle made a higher high, but then retraced. And you would expect that this candle would come back and make a lower low. I guess in this case, it'll be Tuesday, not Monday. So that's what we're watching for. But at the same time, maybe we don't make that lower low. $76.27 is the low for this candle. So that's a line in the sand. As long as we stay above that, you can be long here playing off of this swing low. And I suspect we have a similar pattern for URNM. Yeah, same kind of deal for URNM, URA, just different levels. So that's our update for the week. Crypto is in weekly cycle decline. Broader markets still rallying, probably start their weekly cycle decline soon. But precious metals have woken up. Platinum, gold, silver, they're all longs. Just obviously watch your stops. That's the update for today. Thanks for watching.